President Obama delivering the first State of the Union address of his second term last night, laying out an agenda that includes everything from raising the minimum wage to dealing with climate change, just to name a few things. So based on what we heard last night, what moves should investors be making today? I'm joined on set here in New York by Craig Irwin, Senior Vice President of Clean Technology and Industrial Growth at Wedbush Securities, and Jeff Kraws, CEO of Crystal Research Associates. Also joining me in Boston is David Joy, Chief Market Strategist with Ameriprise Financial. Now, before we get into the speech itself, let's take a look at the broad market. Stocks, as we know, are nearing all-time highs yet again today, despite a bit of a pullback. We're still in that territory. David, was there anything you heard last night that would either derail or propel the rally we've seen so far this year?
I have to say the answer is no. We heard a lot of proposals for programs that are unlikely to get funded. Maybe the one bright spot from my perspective was a favorable mention of potential energy independence, and particularly some reference to natural gas, which I think is a positive development. But beyond that, I didn't hear too much, quite frankly, that's going to change my outlook. My outlook is fairly constructive, but we're going to have to deal with the sequester in a couple of weeks. I think that's still the big issue.
In fact, that was something discussed by the president last night. The deadline is fast approaching. Let's hear what President Obama had to say on that.
Broad-based economic growth requires a balanced approach to deficit reduction, with spending cuts and revenue, and with everybody doing their fair share. And that's the approach I offer tonight.
All right, let's deal with it now. In New York, Craig, Jeff, of the companies you follow, the executives you talk to, how big of a worry is this deadline?
In Cleantech, I think there's a lot of enthusiasm for the policy that's going to come out over the next several months. Really, the deadline has been a significant issue, but it's not as big a problem as it is in some of the other industries. Real regulatory issues are the issues that are hampering growth in the industry, and those are primarily issues that the president can deal with without massive tax subsidies or outright subsidies or changes significantly within the tax code that we're looking at. So there are a lot of opportunities for the president to take action, and this is something that's not really going to impact the broader clean tech industrial growth companies that I look at.
How about healthcare, Jeff, on this one issue?
On this one issue, healthcare has largely been out on the table already. The pharma companies were pretty much prepared for what's been coming down the pike since healthcare reform started actually with the Clinton administration and now through Obama. I believe while the details are yet to emerge and be battled out between how much pharmaceutical companies get cut back, how much Medicare changes, etc., I think the playing field is pretty well understood right now for the healthcare companies as to the change that's going to take place. It's more of the degree.
All right, we're going to get into some specifics about the individual areas that you cover in just a moment. But David, I want to go back out to you on this sequestration issue. Do you change the way you play the market leading up to that period while the conversations are going on, or do you stand pat?
Well, I think maybe it's an opportunity to take some of your profits. We've had obviously a great start to the year. I think the sequester uncertainty is enough to cause this market to continue to churn sideways. I've been anticipating a little bit of a pullback, and I thought this would be the catalyst. We haven't seen that yet, obviously, but I think it's still a possibility. But the bigger issue, I think, for at least some industries is going to be, even if the sequester is triggered, for how long it lingers. There is a chance that it could go all the way to the debt ceiling debate in July. And if that's the case, then clearly there are negative implications for defense industry companies, and the economy is going to slow down. So I think the first half is likely to still be choppy overall, and as a result, I'm a little bit cautious on the market's performance potential in the next couple of months.
All right, now let's zero in on what the president had to say about health care. Last night, President Obama is saying taxpayer subsidies to prescription drug companies will be reduced.
We'll bring down costs by changing the way our government pays for Medicare, because our medical bills shouldn't be based on the number of tests ordered or days spent in the hospital. They should be based on the quality of care that our seniors receive.
Jeff, you're on bad. You follow healthcare. You know these companies very well. Healthcare covers about 1/5 of GDP by your calculations. So we heard some of the proposals last night. You said it's already been in focus. What companies would you buy now based on what President Obama wants to get through Congress this year?
I think you still have to stay with innovation. You have to stay with innovation. You have to stay with companies that are efficient. The reality is, with about 10 cents of every dollar being spent on healthcare, being prescription drugs, the more you utilize prescription drugs, the more you have the chance of not ending up needing long-term extensive health care. The reality is that prescription drugs are up 47% since 1999. That is the amount of drugs prescribed. Well, what is the reason for that? Elderly population, treating more conditions, and if you take your prescription drugs properly, it can actually be a key to lowering overall health care costs.
So you like the drug makers?
I like the drug makers.
Couple names?
But I like the innovators. So I'm going to stay with companies like Pfizer. I'm going to stay with companies like Bristol Myers. I'm going to stay with companies that are creating new innovative drugs like Gilead, Metastat. I'm going to stay with companies that focus on efficiency with distribution like medical companies that are specific like Medical Action Industries. And I'm going to stay with some smaller companies that I think that are really innovative, such as Unilife with regard to lowering prescription drug costs for needles and drugs that are administered that way. And last but not least, certainly I'm going to stay with companies like Teva it's the largest generic company in the world. We're going to continue to increase the utilization of generic drugs, especially with drugs continuing to go off patent, and it's up to the innovators to come up with new drugs so that they can support the profits and growth and do their job to lower overall costs.
We heard the president talking about the length of hospital stay. Do you sell hospital companies? Are they not as good of an investment?
Hospital companies and HMOs and PPOs, those type of companies, those are not places that I would look to put money in. I'm trying to get rid of sort of the middleman. Mm-hmm. I'm trying to focus on products that can lower overall healthcare costs. Once again, prescription drugs are, if you utilize them, you're going to avoid your chances, or you're going to lower your chances of having other problems. So if you're just an innovator, if you're just the middleman, if you're the insurance company, if you're the HMO, I'm not sure you're going to try and have leverage, but certainly the government is going to clearly get in there, and they're going to really try and push that down. So I think the place to be is an innovation. The place not to be is I'm getting my benefit as a cost-plus guy, or I'm getting my benefit as a Me Too company. I think those guys are going to go by the wayside.
Okay, innovation also very important in energy. We heard a little bit about what the president thought about that last night. Let's take a listen.
Last year, wind energy added nearly half of all new power capacity in America. So let's generate even more. Solar energy gets cheaper by the year. Let's drive down costs even further. So tonight I propose we use some of our oil and gas revenues to fund an energy security trust that will drive new research and technology to shift our cars and trucks off oil for good.
Craig, he covered everything. You're up now.
He definitely covered a lot. Another thing that he hit as well that was very important is also energy efficiency. So just to touch on one of the things he was referencing to, bringing down costs in solar. Cost is not the issue anymore. It was 4 years ago. You know, the holy grail for solar has been to get module prices below $1 a watt. Now module prices typically are selling for 70 cents a watt. So that issue is off the table. The real issue as far as market volumes, market growth, is access to capital and permitting. So that's why we're seeing very specific business lines do very well in the industry, specifically like SunPower and their residential solar initiative, SolarCity, some of the private companies like Sunrun. They bring the money, so when the individual customer can't finance the $10,000 or $20,000 outlay, they bring the money and they do the project, and both parties share in the benefit. You know, energy efficiency is another thing he's shown a lot of support for. Really, energy efficiency, the greenest megawatt is the megawatt never consumed. It's the easiest ROI across the entire energy industry that I look at, across the broader clean tech industrial growth sector. And that's something where I think the president really does have a lot of policy opportunity.
Let me ask you two things. First of all, I want to get some specific names in terms of stocks, but I want to ask you about solar stocks in particular, because I feel like they're always victim of a bit of a boom and bust cycle. I mean, should you be investing in these solar names, and how do you play that innovation or that efficiency theme by individual companies?
So my clients know that I've been extremely bearish on solar across the board since 2008. The massive overcapacity in the industry, not just out of China, but out of Europe as well, and the expectations of step-downs in subsidies has created some serious overhang for the industry. But now, as we look at the industry last year, just south of 30 gigawatts in actual sales, Tier 1 credible manufacturers have around 40 gigawatts in capacity. The actual quoted industry capacity is closer to 60, but you'll probably see a lot of that disappear in consolidation over the next couple of years. Growth in the industry is expected to exceed 50 gigawatts by 15.
So how do you play it in terms of names?
Right now, you want to really focus on quality. I'm not saying that now is the entry point for solar. I think that we're going to get a lot more visibility on companies actually executing around bringing capital to their customers.
Okay.
And
some of the names you mentioned
yeah,
earlier.
So SunPower is the public company that's doing very well there. Obviously, SolarCity had a very successful IPO. That's their business model.
All right, we're going to come back to both energy and healthcare, but I want to again bring up another big part of the speech last night. It wasn't that big, but President Obama actually named some names, and he was talking about bringing jobs and manufacturing back to the U.S. Listen to the names he dropped.
Caterpillar is bringing jobs back from Japan. Ford is bringing jobs back from Mexico. And this year, Apple will start making Macs in America again. The CEO of Siemens America, a company that brought hundreds of new jobs to North Carolina, said that if we upgrade our infrastructure, they'll bring even more jobs.
All right, David, out to you. Do you see this as a real resurgence, manufacturing companies hiring in the U.S.? And if so, is that positive for manufacturing companies in terms of possible stock price appreciation?
Well, certainly the potential is there for a couple of reasons. One is we're getting very fortunate with our energy self-sufficiency and allowing for the cost of manufacturing here to drop. That's number one. Number two, our labor competitiveness has improved dramatically because so far in this recovery, the workforce hasn't really participated much in the benefit of that. Wages have been held in check. At the same time, you see a lot of foreign economies experiencing wage price pressures. So on a relative basis, the U.S. manufacturing workforce is looking increasingly competitive. There's another issue here, of course, and that is currency fluctuation. There's been a lot of talk about that in the news in the last 48 hours, but the fact is that if you can base manufacturing in a number of different localities, you can smooth out the impact over time of any dramatic currency moves, whether there's a currency war or not. So, yes, I think U.S. manufacturing looks attractive here for a lot of different reasons, and I think it's a trend that's going to continue for a number of years.
All right, gentlemen here in New York, do you see that in the companies you follow? Are they building here in the U.S.?
Absolutely. So Acuity Brands is one of the companies that I follow. They're the largest lighting fixture manufacturer in North America. Acuity's hiring here in the U.S. They're repatriating manufacturing primarily because it allows them to lean out their supply chains, bring down their working capital. And then we have the benefit of more effective workforces, and then the lower energy costs. The fact that energy costs have been continuously heading lower, natural gas is really helping them bring these jobs back to the U.S.
Jeff?
Well,
a little different with Big Pharma, though, right?
A little different with Big Pharma. Big Pharma certainly has been cutting back and curtailing a lot of the expenditures on marketing and trying to put dollars where it can be spent, which is R&D. Putting your money into R&D is basically your pipeline of tomorrow, which is basically your revenue. So they've been focusing on that. But you are getting companies that are expanding here. We talked about Unilife earlier, but the secondary needle sticks injuries are a huge problem for bloodborne illnesses. So you think about nurses and doctors and needles that don't retract and how they're stuck in the linens, and a person comes in the emergency procedure, now they get stuck, and all of a sudden that person ends up with HIV or hepatitis, you name it. So if you have a company that can get rid of needle stick infection, like permanently, why wouldn't you use that? That company took its technology from Australia, brought it to the United States, located in Lewisberry, Pennsylvania, and I believe hired 1,000 or 1,500 workers up from a couple handfuls, and they're actually expanding. I mean, they're like a U.S.-based company now that's expanding and trying to grow their business in the United States. Medical Action Industries, the same sort of thing. Long Island and Virginia, and they're really trying to expand their population.
Are they good investments? Does buying America pay off?
I think buying America does pay off. I think that ultimately you're betting in the technology and you're betting on the management. And I think that while you have to go with not invented here technology sometimes, I think that the good old-fashioned American ingenuity can pay off.
You mentioned R&D, and this is a question for both of you because the president mentioned that as well last night. And he focused in on some healthcare R&D. Jeff, do you see R&D money coming from Washington? And Craig, the same to you, because we certainly know there's been hits and misses from the Obama administration on the energy front. Craig, you first. Jeff, you first.
Well, I hope so. I mean, once again, pharmaceutical companies really took a bad rap. Everybody's, cut down on prescription drugs. Grandma Jones is either going to pay her prescription drugs or she's going to get, she has to pay her rent. What does she do? Well, it wasn't the drug company's fault that the government never really covered prescription drugs the way they should have since, the 60s, basically. A lot of presidents have tried and failed. Well, now the reality is, and I'll say it over and over again, 10 cents of every dollar is a prescription drug. 90 cents is something else. And, you have to utilize the drugs to lower the health care costs. So what the Obama administration has said is they're not necessarily going to reward and reimburse as much for old technology, but they're willing to put incentives in for new technology because they recognize that cancer and obesity and diabetes and heart disease, heart disease is the #1 killer of women, yet do you hear about it a lot? You don't hear about the #1 killer of women being heart disease. People think it's breast cancer or something else, but these top 10 diseases that we haven't been able to really touch for decades are going to be hugely problematic as far as costs go to the administration. So, yes, I believe the administration is going to provide incentives via R&D.
And quickly from you, Craig, on that, would you agree?
So just first, I would say that I don't think people talk enough about the success stories that Obama's already supported. Specifically, Cree and Tesla are two that really stand out to me. So, yeah, R&D, this is where innovation happens. America, we have a tremendous history of innovation. The LED industry, for example, some of the leading pioneers in this country have developed most of the important technology. We have companies like Bridgelux, Syrah, Cree that are all making tremendous progress, smashing the paradigms that existed 5 years ago, and just really delivering in a way that is going to grow jobs in this country. Cree is already hiring significantly. Syrah and Bridgelux both have significant potential to hire more. And R&D support at the university level, at the government lab level, and then subsidizing research in companies benefits this ecosystem that allows the success of U.S. innovation here.
Reiterating what he said, it is the U.S. innovation that's done it. If you look at the biggest biotechnology drugs, the biggest pharmaceutical products, medical devices, they've come out of the U.S.
I want to go back to David on this idea of what's next in terms of innovation and money. And David, we were talking about defense earlier. It could be an issue going forward, the defense sector with sequestration. I'm wondering if a way to play defense is actually technology. The president talking about cyber warfare, and I'm wondering if we're not boots on the ground, if we're clicks on the mouse. Does the technology sector become much more attractive if we're not, looking at defense companies and we're looking for innovation and trying to save money? Is that a way to play the State of the Union?
I think without question. I like technology for all of those reasons, but in addition to that, just even beyond the defense applications, I think there's been a lot of postponed upgrading of systems that is waiting to be unleashed. I like technology. But yeah, I agree with you. It looks, at least in the short run, that things like, new ships and missile systems and new jet fighters are going to be under pressure. But at the same time, I don't expect the full impact of the sequester to hit the Defense Department. I think some of that's going to get put back eventually, so it won't be quite as bad. And if that's the case, maybe some of the downturn in these defense stocks makes them a little bit cheap. Certainly a lot of them have pretty good dividend yields. But to get back to your original point, I like technology, and I think it's a good backdoor way to play some of this. But I'd like to also raise the issue of corporate tax reform, something I didn't hear too much about last night. I think if we were to settle that question once and for all so that corporations would have more confidence about what their R&D budgets might be, what their overseas repatriation potential profits might be, I think that too would unleash a wave of innovation. I'd love to hear what my colleagues here in this discussion think about that issue.
Let's bring them back in. All right, two issues we haven't gotten to yet. Tax code, what are you actually making in terms of your profits? And what happens if you do have to pay workers more if minimum wage gets raised? Are we seeing a potential for higher profits or lower going forward?
So in general, within the broader clean tech, industrial growth sector, there are not a tremendous amount of employees making minimum wage. This is a small piece of the overall labor pool that these companies employ. So to see a higher minimum wage, I don't think would have much of a headwind for the industry. Going forward, the tax code really does offer a lot of opportunities. A lot of the CEOs I talk to say that if there were tax holidays offered, they would much more seriously consider citing manufacturing plants in this country when they are actually building them overseas or considering building them overseas because of the significant advantages of U.S. labor. So there are things that could be done in the tax code. Will they be done? I don't know, quite possibly not, given the challenges that we're going to see. But there are opportunities in the tax code to promote growth.
Jeff?
Well, the minimum wage, same sort of issue, not really a huge impact on the pharmaceutical industry. Tax code, massive impact on the pharmaceutical industry. When I was the director of competitive analysis for Bristol Myers Squibb, one of my main responsibilities was looking at PFIC analysis, Puerto Rican tax benefits, looking at swords repatriation, figuring out what pills you put on what planes flying to where to get encapsulated in what country to put back on a plane for how long to fly someplace else to get finished. And I mean, it's a logistics, and it brings that quant logistics course that you'd have taken in college into play in a nightmarish fashion.
I didn't take that course,
so
by the way, but go ahead.
It is a huge. You didn't miss much. It is a huge issue for pharmaceutical companies because a lot of the manufacturing is done abroad, and a lot of the countries abroad have offered huge incentive to pharmaceutical companies to basically manufacture in those areas. So there's a chance for Obama actually to bring jobs back on shore if he does this the right way, and get the pharmaceutical companies to do more manufacturing here.
All right, we're going to go to final thoughts. David, I want to go out to you first. We've covered a lot of ground. Of course, these are all ideas. Whether any of them come to fruition or not, we don't know. But final thought from the investor perspective, what is the biggest takeaway that they should be doing today, now?
Well, I think you should try and strip away some of this political uncertainty and look at the fundamentals. And when you do that, you're seeing the U.S. economy improving for a lot of different reasons. You're also seeing improvement in the Pacific Rim, some maybe green shoots in Europe. So the point is, I think the world economy is getting better. That means that earnings growth should be good. Stock valuations are not challenging, and monetary policy is extremely aggressive. To me, that means higher stock prices. We might have to get through a couple of months of choppiness before that ascent resumes.
Craig, your final thought.
So I think we're likely to see the focus on policy over the next several months really benefit a number of the industries within my broader coverage. So I think we're going to see energy efficiency really be a primary beneficiary, primarily because that there's an already existing $80 billion IDIQ to fund the work. A lot of these projects are ready to go. That really we need to see a push on the federal facility owners. That could have a significant impact across several different companies, not just the energy service companies, but bigger companies like Johnson Controls and Siemens and Honeywell can see an increase in their overall bookings and order activity because of this. I think solar probably is through the tail end of their bottoming process right now. It's tough to see capital running to that industry, really wanting to finance a lot of projects, but we are at grid parity in a lot of locations, so there will be good progress there. I'm not saying it's time to buy those stocks. And there are a lot of other niche cases, for example, like Tesla that I mentioned before, where support of the administration has really helped in a tremendous way, not just providing capital, but providing know-how, providing the intelligence out of the national labs that's allowing this industry to develop from nothing.
All right, Jeff, your final thoughts.
Stick with the innovators. Go with companies that are really working on controlling their costs, but ultimately go with R&D. Don't be afraid to step out to that population base. The consumers are there. The people with the money want to live longer. That's the bottom line. And you've got a captive audience which is aging. Don't be afraid to take a chance on a Metastat for cancer and Infinity Pharmaceuticals for cancer. Companies have got novel breakthrough technology. Don't be afraid to go out with a Unilife that can get rid of needle sticks. And stick with your core. Have a core base like a Pfizer and a Bristol Myers and a Teva. who can help insulate, that have consumer businesses or have generics businesses which are strong. And last but not least, you have to distribute these things. So a company like Medical Action Industries, getting efficient, there's going to be more distribution. If you get efficient with greater volume, you should be able to make more money.
All right, I want to thank everyone, starting here in New York with Jeff Kraws of Crystal Research, Wedbush's Craig Irwin, thanks very much, and in Boston, David Joy of Ameriprise Financial.